Welcome to Knowledge Fulmination. Today's hot topic is the collapse of American banks. Is this the start of a new economic crisis like we saw in 2008? Well, we'll get to know that soon enough. Government regulators seized and sold off First Republic Bank on Monday, making it the third bank to fail this year after Silicon Valley Bank and Signature Bank collapsed in March. The three banks held a total of $532 billion in assets. That run on deposits quickly led to the third-largest bank failure in U.S. history. Regulators announced late Sunday that Signature was being taken over to protect its depositors and the stability of the U.S. financial system. I think part of what happened was that regulators wanted to send a very strong anti-crypto message, said board member and former Congressman Barney Frank. On Friday, Signature Bank customers spooked by the sudden collapse of Silicon Valley Bank withdrew more than $10 billion in deposits, a board member told CNBC. A week after Silicon Valley Bank and Signature Bank failed, First Republic Bank is considering a sale following a dramatic 60% drop in its stock price over the past week. The bank also received $70 billion in emergency loans from J.P. Morgan Chase and the Federal Reserve. That led to pressure on Signature, First Republic and other names late last week on fears that uninsured deposits could be locked up or lose value, either of which could be fatal to startups. In the lead-up period, many banks within the United States had invested their reserves in U.S. Treasury securities, which had been paying low interest rates for several years. As the Federal Reserve began raising interest rates in 2022 in response to the 2021 to 2023 inflation surge, bond prices declined, decreasing the market value of bank capital reserves, causing some banks to incur unrealized losses. To maintain liquidity, Silicon Valley Bank sold its bonds to realize steep losses. Also, several banks gained market exposure to cryptocurrency and cryptocurrency-related firms prior to and during the COVID-19 pandemic. The 2020 to 2022 cryptocurrency bubble popped in late 2022-14. In this environment, three such banks failed or were shut down by regulators. The first bank to fail, cryptocurrency-focused Silvergate Bank, announced it would wind down on March 8, 2023 due to losses suffered in its loan portfolio. 2 days later, upon announcement of an attempt to raise capital, a bank run occurred at Silicon Valley Bank, causing it to collapse and be seized by regulators that day. Signature Bank, a bank that frequently did business with cryptocurrency firms, was closed by regulators 2 days later on March 12, with regulators citing systemic risks. The collapses of First Republic Bank, Silicon Valley Bank and Signature Bank were the second, third, and fourth largest bank failures in the history of the United States, respectively, smaller only than the collapse of Washington Mutual during the 2007 to 2008 financial crisis. In 2019, the Federal Reserve's tailoring rules changed, increasing minimum asset threshold from $50 billion to $100 billion and reduced the number of required stress testing scenarios, allowing banks with under $100 billion to have reduced liquidity standards. Signature Bank and First Republic Bank were under the $100 billion total assets for the Federal Reserve's tailoring rules, allowing the banks to have reduced regulation for liquidity. Some have questioned if First Republic Bank would have a bank run if there were similar regulation to EU countries in the United States. Liquidation of Silvergate Bank. Silvergate was hit with a bank run in the wake of the bankruptcy of FTX. Deposits from cryptocurrency-related firms dropped by 68% at the bank, with the bank facing requests from its clients to withdraw upwards of $8 billion in deposits. As Silvergate did not have enough cash on hand to satisfy the deposit withdrawals, the bank began to sell its assets at a steep loss. The company realized a loss of $718 million on withdrawal-related asset sales in the fourth fiscal quarter of 2022 alone. The bank, in a public statement, said that it was solvent at the end of fourth quarter 2022, with an asset sheet containing assets of $4.6 billion in cash and $5.6 billion in liquid debt securities, with $3.8 billion in deposit obligations. Silvergate faced tight financial constraints in the coming months, selling assets at a loss and borrowing $3.6 billion from the Federal Home Loan Bank of San Francisco to maintain its liquidity. Silvergate wrote in a regulatory filing on March 1 that the bank risked losing its status as a well-capitalized bank and that the bank faced risks relating to its ability to continue operating. Facing continued losses from sales of securities at mark-to-market price, Silvergate released a public notice on March 8, 2023, saying that it would undergo voluntary liquidation and would return all deposited funds to their respective owners. Collapse of Silicon Valley Bank. To raise cash to pay withdrawals by its depositors, SVB announced on March 8 that it had sold over $21 billion worth of securities, borrowed $15 billion, and would hold an emergency sale of some of its treasury stock to raise $2.25 billion. The announcement, coupled with warnings from prominent Silicon Valley investors, caused a bank run as customers withdrew funds totaling $42 billion by the following day. On March 10, 2023, as a result of the bank run, the California Department of Financial Protection and Innovation, DFPI, seized SVB and placed it under the receivership of the FDIC. The FDIC established a Deposit Insurance National Bank, the Deposit Insurance National Bank of Santa Clara, to service insured deposits and announced that it would start paying dividends for uninsured deposits the following week. The dividends were funded by proceeds from the sale of SVB assets. Some 89% of the bank's $172 billion in deposit liabilities exceeded the maximum insured by the FDIC. 2 days after the failure, the FDIC received exceptional authority from the Treasury and announced jointly with other agencies that all depositors would have full access to their funds the next morning. On March 26, 2023, the FDIC announced that First Citizens Bancshares would acquire the commercial banking business of SVB. As part of the deal, First Citizens brought around $56.5 billion in deposits and $72 billion of SVB's loans discounted by $16.5 billion, while around $90 billion of SVB's securities continue to remain in receivership. The FDIC received about $500 million worth of equity appreciation rights linked to First Citizens shares. 51. SVB's 17 branches reopened under the First Citizens brand the next day, with all SVB depositors becoming depositors of First Citizens. SVB Private was initially going to be auctioned separately, but First Citizens later acquired the business as well. Collapse of Signature Bank. As cryptocurrency prices dropped significantly in 2022, particularly so after the collapse of cryptocurrency exchange FTX, depositors in Signature Bank began to withdraw deposits in the tune of billions of dollars. By the end of 2022, deposits in the bank totaled around $88.6 billion, down from $106.1 billion in deposits held at the beginning of the year, a time when over one-quarter of deposits were held by digital asset-related entities. Towards the end of 2022, Signature Bank cut business ties with cryptocurrency exchange finance, seeking to reduce the bank's exposure to risk associated with the cryptocurrency market. According to Signature Bank board member Barney Frank, Signature Bank was hit with a multi-billion-dollar bank run on Friday, March 10, with depositors expressing concern about cryptocurrency-related risks affecting the bank. Investor confidence in the bank was also badly shaken, and the bank's stock declined by 23% on that Friday, the day on which Silicon Valley Bank collapsed, marking the then largest single-day decline of the Signature Bank's value in its 22-year history. On March 12, 2023, 2 days after the collapse of Silicon Valley Bank, Signature Bank was closed by regulators from the New York State Department of Financial Services in what is the third biggest banking collapse in U.S. history. Now the most common reason for failures of these banks is bubble companies like cryptocurrency. Bubble company is a company whose shares are highly valued and then plummet. Another common reason is decrease in the value of bonds which the banks own, and as a result of less liquidity in the banks, they had to sell them at losses and suffered huge losses overall. Now the real question is this the start of another economic crisis? We don't know yet, But we know for sure that banks all over the world are decreasing in value, and this might be an opportunity to maybe invest in them? Let me know your thoughts in the comment sections. That will wrap up for today. Thanks for watching.